Good day, I hope you're good. Just want to do some markups, a few markups on a few assets and synthetic indices. So the current chart is C1 daily. You can see here for the whole month, we've been sort of in a range. So basically when you come to the chart, the first thing you want to look for is like where your price is going. You want to check whether it's a downtrend, uptrend, whether the market is choppy or it's in a range. So on this particular asset, you can see it was ranging the whole month. Just going to show you the highs. So we've got these highs here. And we've got these lows. Okay, you can either use this order block here because it's more or less the same thing. So you can see price was just ranging in there. So that we don't just fill our chart with many things, I'm going to remove this. I'm actually going to move it to here, these lows, which we had like mid-month. So you also draw that into the future. Okay, so this is the daily view. So for now, currently our daily candle is this one. So there's a possibility price can push as high as these areas. But let's drop to the small time frame and see what we come up with. So when you go to H4 now, it's your week to week price action. So this is the beginning of this current week. Excuse me. So if you have period separators, you kind of know that, okay, this period here is 1 week, and this is the current week we're in right now. It ends Saturday midnight. So as you can see from the beginning of this week, price came slightly below these lows. So there's like sell side liquidity. There's people who put like sell stops here. So they sell side liquidity below this area. So the price came, took that sell side liquidity, then started pushing back up. Okay, so right now, what I'm looking at is this area here, because above this area, there is buy side liquidity. And just before I explain H4, let me just go back to the daily. I want to show you something. Okay, so on the daily, when price came down, you can see these highs here. Buy side liquidity triggered, then price came back down. So as it was coming back down, this huge impulsive candle, they left a fair value gap here. So it's the one marked by this rectangle in case you're trying to figure out where it's coming from. So we know when price comes into this fair value gap, it could reject and come back down. That's possible. They could go back up. If we see them break down below again, I think we could also look for sales. So going back to H4, okay, you see price is in that fair value gap, right? So the high of this week, buy side liquidity triggered. This is today's LOD. You see it when we drop maybe to H1, M30, M15. So if you're only selling crash, what you're looking for is for price to show you that it's now rejecting either the fair value gap or this buy side liquidity here. So this is marked by this gray line. Remember, this is also H4. So you want to use your high time frames to sort of decipher where your price is going to next. So for this particular up move, we're looking obviously for this as a target, and for this as a target. For those who are buying, those were your targets. So for now, we wait and see how price reacts on that zone, right? So if you drop to H1, okay, H1, we don't have much there. That's where you see today's lows. At the same time, this is yesterday's lows. Okay, so from yesterday, you can see this was the sell side liquidity. Once they take that out, they induce sellers before the price goes up. So if we in an uptrend, once you decide that you're in uptrend, you just wait for the dealer to take out or induce, for example, here induce sellers, then the price continues to go up. So right now, buy side liquidity was activated, but price is still pushing up. So I'm looking at this area, which falls into our fair value gap from the daily chart. I'm also looking at this area as a point of interest, and I'm looking at this area as a point of interest, and also this area. So it all boils down to what price action you see. If you see price sort of rejecting, giving you rejection candles, you just drop down to a smaller time frame and you look for patterns. So I think yesterday we took a sell. Okay, I don't think we traded C1, but we took a sell C5. I'll sort of explain it. So for C1, there's nothing for now until price shows us a reversal pattern, or until the delivery of price changes from being an uptrend to a downtrend. Okay, so that's C1. C5, I just want to explain the setup we took. So right now, I think actually I have a sell setup going on. So let me just confirm with TDI here, H4. Okay, I'm just checking on my phone, because on my phone, I also have TDI confirmations. Okay, so if you see I open one position just as we wait, so there's more or less a sell pattern. If you see from yesterday's setup, what we're expecting, or what was like a possible scenario, was for price to break, retest, sort of show that it's coming down, then come back to this order block. But if you check, they came here, violated. But at the same time, I think we took a sell here because this was an ID50. So if you're day trading, it's more or less checking what price is doing, like on an hourly basis, to sort of decipher what you do next. So after this ID50, we took sells here. We took profit here. So you always want to take profit on the next level of support, or where you see your price 10, just to make it simple. So for example, right now, if we're saying we're selling, we are going to be targeting this area first. Okay, so for now, I'm just going to change the colors so we do multi-time frame analysis. Okay, so we go to the daily. Okay, on the daily charts also, you can see this was sort of in a range for the whole month. So we've got this area here. You can see buy side liquidity was triggered 2 times, like 3 times actually. The first time was here, then price fell. Second time, price fell. Third time, price fell. So remember, this is the daily chart. So on a smaller time frame, you could be getting sell setups in the on the bottom side, more or less the same thing. Okay, we're looking at these lows here. Okay, so we see price was in that range. So possibly what could happen now is you want to look at the previous highs, which is this area here. So we look for possibilities of where price could be reaching to. They could reach to that area before the drop. It's possible they could reach to this order block here. If you see in this area, it's also like a fair value gap. So hence price came in here, rejected. So once you see that rejection, you can start looking for sells. So coming to today's price action, so we're still in that sort of range. There's not much movement. drop to H4 to see what's been happening during the week. Okay, here my period separators are not so clear, but okay, let me just check. Just want to check which day the week started on. So remember, synthetics markets are open 24/7. So the week would have started on a Sunday, which was on the 26th. Okay, so this is our period separator here. Okay, so you see price here, they came, set an initial high, dropped down, came back up, dropped down. So there's not much momentum happening there. So what you want to do is sort of pinpoint the structure, sort of have maybe trend lines just to help you figure out where price is going next. So H4, nothing much happening here. It's more or less the same thing. Range, although price is sort of like in an uptrend because you see price creating these high highs and higher lows, right? Okay, but here they failed to break this high. Same again here. So there's a possibility they want to come to this area. So you figure out where your price is going, you mark the areas, drop down to a smaller time frame. Okay, so we put this here. Okay, so chart is looking something like this. So at this point in time, this price action is price rejecting of the 200 EMA. We've got a hanging man there, hence this bearish candle. So possibly we can have a follow through candle. That's why we're looking to sell. This comes with screen time and knowing how price reacts on moving averages. If you can check on all rejections, price had followed through candles or a follow through move, right? Here, 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 and we're expecting the same thing here. So now we're going to drop to H1. Okay, on H1, price is rejecting off the 800 EMA. So you want to mark the high of the day, the low of the day. Okay, so this is the high. And this is the low of today. So two things can happen. Price can either push back up towards the high, possibly create like a head and shoulder type pattern, or from here they can drop. So let's just move to smaller time frames and see if we can get something we can use. So if they also break this area, we're looking for them to approach sell side liquidity, which is lying below yesterday's lows. So they could possibly also do this. That's also possible. So dropping down to a smaller time frame, M30. Okay, you want to mark this area. If we drop down to M15 or M5, I think we should get an order block. This is more like a hidden order block, but we'll confirm it just now. Let's see if it's there. Okay, there we go. So if you check on M15, there is your order block. Right, so we're just going to adjust it. Okay. So you can already check we had a structure here, which was broken by an impulsive move. So after the structure was broken, price pulls back up into an order block. Then we have sort of like an MA. So what we want to see is this order block going to hold? Is this price going to continue pushing down? That's what we want to see. So at the same time, price can still come above this area to trigger buy side liquidity before it decides to fall back down. So those are just variations in the patterns which you expect, like on a day-to-day basis. So M5, more or less the same thing, but price now is ranging because you can see the moving averages are in the same area. So if you see your moving averages on the same area, what you want to wait for is for price to actually break, show you where it wants to go, then you take the trade. So this, you can consider this an early entry. Then for now, we want to wait and see what price happens. So they could also come to this area. So you also want to mark all those zones so that it kind of helps you take your trades. Okay, so these zones are also close together. So you just want to see how price reacts. But your best time frame will be the M15 just to see what's going on from like a bigger picture before you commit to your trade. So the reason for having one early entry is if this market decides to drop, you are already a participant, you already have a trade. But as the price is moving now, you kind of have time to sort of do your multi-time frame analysis, figure out whether the price actually wants to come here, maybe here, or maybe they're just going to drop, or they will continue pushing up. So that way you can just manage your trade accordingly until it becomes a high probability trade. So for now, you wait for your price to close below the 13 before you actually commit fully to the sell. So the first take profit will be on this area. So you can always adjust the order blocks or your targets. Okay, so for now, you just have to wait and see what price does. If we check from the 4 hour, I feel like we're going to drop. So there's more or less 3 hours until this candle closes. So there's a lot of time, there's a lot of action which could happen within this 1 4 hour candle. So hence, if you're on M15, you just have to patiently wait for familiar patterns which you're familiar with before you take the trade. If you are in this trade and you see this order block get broken, your stop loss can either be here or it can be above this that order block there. So you can just adjust your trade accordingly. You can either put your stop loss there, you can put it there, it just depends. But you should always aim to like make your reward at least 2 times what you're risking or more. So you can start from 1:2, and also be in mind with synthetics, they're very volatile, so you can get some good moves. 1:20 even, just depends with the type of movement happening on the particular asset on a particular day. So that's C5. I think one other thing I needed to look at was V75. Somebody requested. Okay, so more or less same thing. You can start even as high as the monthly just to see the bigger picture, like what's going on. So from here, you can already see buy side liquidity triggered, price fell. But remember, this is the monthly, so each candle is just like a month. Takes a lot of time for this to play out. But at the same time, you just want to check what your price is doing. So what could the price be reaching for from a monthly perspective? It possibly is reaching for these lows or for that area, which also falls on the 50 EMA. Right, so that can be a target if you're selling and you wish to hold. But remember, this month is about to end. So what usually happens is if a candlestick opens Like if it's going to be a downward month, if it's going to be a selling month, which could possibly happen here because of this momentum, you expect the next month price to open, push up. So at some point the candle goes green. So they do this so that they leave like a week. They need to cover the liquidity in here, right? So when they come to this open price of the month, once they drop, this candle will become red and it leaves a wick or black, showing that it's bearish. So possibly price will actually push up a bit before they eventually get here. So let's drop to a smaller time frame. Weekly, more or less the same thing. You can see the momentum from last week. This current week, we haven't seen much movement on the weekly candle, but as you can see, price is heading to the same area. So what could possibly happen is they could drop into this area, or they could push back up before dropping, like we saw on the monthly chart. So daily, this looks like a continuation pattern to me. So where is the dealer going? There's liquidity below this day's candle. So that could be a possible take profit area. So what you also want to do is you want to mark that area as a target. Once you have a target, then you need to look for an entry. So this is 4 hour now. Okay, you can see there was an abrupt stop to this upward push up. What could have caused that stop? If you look to your left, there's no order block in sight. But what you simply need to do is you need to factor in this low for this particular week, draw it into the future. Okay, I think if we come to the daily, we might get something a bit more clearer. Just use this. Okay, you can see where price is actually deriving that resistance from. So it's as far back as this low here in January. So you always want to check like what's causing price to move the way it's moving. So we have that area there, and we also have, so we've got this. So you can also mark all these areas, because if you check here, price also stopped, broke, came back up. You mark these, price came there, you mark these. Price can still come up there, then drop in the future. So you can always mark your charts so that it helps you figure out what's going on. So H4, you can see what stopped the price. So now two things can happen. We had a 1350 cross here, so price still has to interact with the 50 somehow. Here it really didn't touch. So what could possibly happen is they could push back down to this week's lows, induce more buyers, come back and interact with the 50, then go down. But it will all depend. Like you need to check how your price is moving, like I said, on a day-to-day basis. So coming to today, we could possibly have a bearish day. Like I say, it looks like a continuation sell. Trend lines sort of guide you to see if the delivered price has changed. So if you see price come here, you could anticipate them to come back up to these highs because we've got an order block there. They could come back to this high, this high, this high. You see, you just have to check how price is moving. So this is H1. So you want to mark the lows. This is yesterday's lows. Price looks like it's about to violate those lows. So for me, I feel like right now price is going to drop to these lows on the bottom. Let me see if I can raise this chart up. I don't think it will come up, but you can see there's sort of like a triangular wedge there. So you can also trade it like as a breakout. And if you trade there, where is most likely price to go to? So they could just trigger sell side liquidity and quickly pull back up. So you can look to buy if they come back up here, or they can just continue until they get to this area. Those are the two possible scenarios. So right now, I don't have an entry. Would have been best to have an entry right on this area here. That would have been best, but we late on that entry already. So let's see if we're gonna get another possible entry. So you can see that other bigger order block from a higher time frame, it can be refined as you drop down your time frames. So you can see from M30 view, that was the order block. Once you decipher where your price is going, you see here that we had a structure getting broken by this downward move. Price pulls back to an OB, then drops. You could have also taken this sell here, is price pulling back to a fair value gap, dropping. Same applies here, because this fair value gap, let me actually draw it. Okay, so it's these 1, 2, 3 candles. This gap in between the first candle and the third candle, that's your fair value gap. So if you draw it into the future, what you want to do is you want to check how your price reacts when it gets into that area. Okay, so fair value gaps, I won't shade the area. So if you see price reacting with wicks, you take your trade there. So let me I want to drop down to a smaller time frame to show you how you look for a pattern. So I want to focus just on this particular wick. I'm going to shade that area. Okay, so it's very important to know what your price is going to, where it's reaching for. So after you get this momentum to the bottom side, you see it was reaching for here. So that shows you that price is sort of willing to go to the downside, right? So if price is willing to go to the downside, price moves like in waves, right? So you look for them to pull back up and drop. So in this particular area, we want to see if we're going to get one of our signature patterns, whereby before price moves, we sort of look for price creating higher highs, higher lows. Then we want to see price break a structure, break of structure. Then we want to see an impulsive move, then price pull back either into a fair value gap, which is FVG, or into an order block, which is OB, before you trade. So this is the area you look for a sell. So we want to see if that pattern was there on a smaller time frame. Right here, I'm going to explain here, because this is a fair value gap on a higher time frame. So it's a high probability area where you should look for your sell entries. So I'm going to explain this. I'm going to explain this. I'm also going to explain this, because it's derived from this price action here. So the first one is this particular area here. So once you see your price get inside here, let's drop down to M5. We want to see what could have made us take a sell in that particular area. Okay, so we had that impulsive move. So when you drop down to a smaller time frame, you see that the sell trade could have been taken as low as this area here. We had this push down, like a momentum push. Price left an order block, so that was the best entry. Price continued dropping, broke a structure here, then pulled back up. That's a fair value gap there. That's a fair value gap there. So as much as you want to see reaction happening here, you also enter and know that price can go as high as this area, or possibly this area is fair value gap. So if you see, this area is the one which was used by this price now. So it's more or less understanding the price delivery from a higher time frame, then dropping down to a smaller time frame and looking for certain things before you enter your trade. So this was the push up. So as we saw price pushing up into a fair value gap, we now need a pattern or something or a confluence which shows us that we should take the sell. First confluence, which is simple, 1350 cross. If you are using BTMM, this is the 13 EMA crossing the 50. You get price running away from that cross. Once they retest the 50, they at the close of that candle, that's where you enter your trade. Stop loss is here. You target the lows, the previous lows you see. So you can see that trade. That's how it played out. So if we drop as low as 2-minute time frame, let's see if we can get something which is sort of okay. The pattern I was talking about, I'm going to zoom in. So you can either find this pattern on M5, M2, M3, M10, M50. They happen on all time frames, but it all comes down to how you want to refine your trade or which time frame you want to enter on. So if you go as low as M2, you see that we had that price range coming up. So now we're looking for the pattern I mentioned. Okay, price comes up. The first candle which breaks the structure, this is your structure on a 2-minute time frame. Let me see if I can zoom in. Okay, so after zooming in, okay, I think I've passed it. After zooming in, okay, what's going on? Let's just move it a little bit. Okay, I'm trying to locate the area I'm explaining. Okay, there we go. So price is coming from these lows here. Price starts pushing up, right? A higher high, which is higher than this one, a higher low, which is higher than this low, higher high, higher low, higher high. Then this is the first candle which breaks a structure here. Then price pulls back up, right? Comes down, pulls back up. So if sometimes the patterns are clear, sometimes they're not clear. But if, as long as you've got your bias from the higher time frame that you go in a certain way, you shouldn't be scared to take the trade. If there's no harm in taking a sell here, anyway, in this area, there's no harm in taking a trade there. So it's putting your stop loss here, because you can check whatever you're risking, you're going to get it back. So for example, here, let me see if I'll be able to calculate the points. Let's say you enter at the close of either this candle, this candle, or this candle. Okay, so your stop loss is around 250 points. Right, pips on V75 are kind of hard for me to calculate, but anyways, you're risking 250, 260 to make about 500. So that's 1:2. So that trade automatically is worth taking. Okay, so you just enter your trade, you have your stop loss, you have your take profit. If you check price, just shift it from that area. Once you see them shift, you can still even scale in, move your stop loss from here to break even, or to slightly above, maybe on the last candle. Then the reward actually becomes more. It changes from 1:2 to maybe 1:4 or 1:5, even more. And once you move your stop loss to break even, your trade now becomes risk-free. So know your targets. Sometimes if you're using smaller time frames like these, make sure you know your target, because price can easily turn back at any point. So we always use the last visible low where price sort of turned as you take profit. So let me see if I can explain the possible move we're expecting today. So if you check after that particular move, which happened here, take profit, price still came back up to an order block here. Then you can see the injection. So you can enter here, stop loss above here or above this candle. Take profit again is the same area, which was the previous low. So you see price came there, then pulled back up again into an order block. And again, there was another sell opportunity, but this one now you see they breaking the zone. I think this one is now when we're currently doing this session. So we're getting a pullback up. For you to be able now to decipher where this price is going, you want to sort of get the bigger picture. So you see price is breaking out of this triangle item. So we can get something like this. So where's your order block? You look for an order block here, you look for a fair value gap. So there is no fair value gap. Price has been delivering equally and pushing down nicely. So possible thing you can get maybe is an order block. So which one is the order block here, and what's our target if we are to take the sell? So your order block is this area here. Okay, so that now guides you. If you drop down to small, okay, before we drop down, I just want to pinpoint the target. So where could price be reaching to if it decides to fall? So they could reach to this area. Okay, that's where they are already. So from there, the next area where they could reach to is possibly here. Let's see if they haven't touched that zone already. Okay, not yet. So that's the first area, but the ultimate zone where I feel price can drop to if the sales are valid is this bottom zone. At the same time, this can be TP1. You also want to use this area here as TP2, and this area is TP3. So looking for an entry now, like I said, the best entry was supposed to be in this fair value gap. So this trade is in motion already. It gave people a chance to enter here, pulled back, gave another chance. So right now, what we're trading is a continuation pattern. So we want to drop down to M5, see what we have. M5, nothing is really clear, too much noise there. Let me see. Okay, price hit a fair value gap. So we could possibly drop from this area. Okay, 2-minute time frame. So we just want to see how price handles this particular area. But there's a high chance, remember, we've got our order block on top here. So price could react off here. These 3 candles, that's an order block which was tested. 2 candles, those 2 green ones, that's an order block which was tested. This particular candle, so this whole area for me is just like a huge point of interest where we can see price actually pushing down. So right now, we want to check what happens here. We're anticipating that drop down. So what you can simply do is, depending with your risk, there's no harm, like I said, in having an entry in there. Okay, I think that's the smallest lot size there. You just open your trade. So when you open there, you know that this is your point of interest. if this becomes violated, then whatever we're seeing here becomes invalid. So how to check this view from M15? Okay, so that's our order block there. This one. So price can simply do this. And our TP is on the bottom side. See if it, there we go. So price can ultimately fall to that area. And our stop loss is slightly above that last order block, because I don't think price really wants to come back into this fair value gap here, because it's already delivering price, right? So let's see what happens for the next couple of minutes as we round up this session. So I'm going to go back to I think, was it C5 or C1? I think it was C5. Okay, so C5, you see price is sort of pushing back up. We want to see if this will hold. If it doesn't hold, we've got like an area of interest here. Price can simply go to the equal highs of today, or the delivered price can actually go the other way. So this sort of guides us to check where price is going. If you see them violate this, then you have to wait for another pattern to be confirmed before you actually take the trade. At the same time, you want to mark areas where you feel like price, something stopped price, and wait for breakouts. So I would also advise you to like mark your charts so that you just wait for areas like those. So all these areas in between, they're just points which guide you. Like if they break here, it's self-stopped, so price can continue falling. Equal highs here on this order block, so that's a point of interest. So you should also mark your charts in a way which you actually understand. You can also have trend lines there just to help you check if you see your price break here, maybe the delivered price could possibly change and they could aim for this area again. Okay, so we're just going to look back at V75. Yeah, I still feel strongly that they could push down, but at the same time, price can do different things. So if they push below this area, we look to move this stop loss from here to just above this candle. So now the reward becomes bigger, our risk becomes tiny, and our reward becomes this whole space where we feel like price can actually go to. So remember, this is being derived from a higher time frame. So possible continuation pattern, we're targeting this area. That's the setup we have at this particular point. So if you go through this, then you can still like sort of back test and figure out what price will be doing, because most of these patterns, they just repeat. So it's mainly timing and a lot of patience, and you just simply have to wait like for your impulsive moves. Wait for certain structures to be broken. Then you can see here, this was the entry. So this was a perfect entry here. This is the pattern explained on M15. As you can see, we were on a higher time frame, higher highs, right? Then the structure gets broken, price pulls back into an OB, then you sell. That's your entry. So once you get a high probability setup, you just go in stop loss. So you look to take profit there. You take profit there. You could possibly take profit here as well, which is almost close to this order block there. And this was the ultimate take profit, where we sort of have price hitting the same zone. So that was the ultimate take profit. If you see price also hit there, they push back up. before a continuation pattern formed. So the truth can be said for a buy scenario or a buying pattern whereby you're having price creating lower lows and lower highs. Then you have price breaking a structure, pulling back into an order block or fair value gap. That's where you enter, target, and possibly target. But you see here, they didn't get there. This area is the one which stopped price if you just draw it into the future. That's what you, so if a pattern is not clear, you don't take the trade. If a pattern is clear, you take the trade. That's basically what you have to do, like on all assets you trade. Let me see if we've got something on jump. Okay, weekly seems to have set the peak formation high. Price fell, broke a structure here. So I'm anticipating price to be delivered lower, possibly to the 50 EMA, because we're coming from this 1350 cross, rejection of the 50. So they can possibly come back to the 50. So you want to use this visible order block here to sort of guide you. So if it's broken, where is price going to go to next? It's possibly going to come to this area here. Okay. So you just simply have to wait. So for now, price pulled back a little bit into a fair value gap, which is this one. So it's candle number 1, candle number 2, number 3, the gap between the wicks of candle 1 and 3, that's your fair value gap. Okay, so from here, we just want to see what happens. Is price respecting this in order to continue delivering to the bottom side, or they will respect, because this is also an order block here, remember, so, or they will respect that and continue delivering to the upside. Okay, here you can see price. So you also want to mark the previous day's low, current day's low, which are more or less on the same area. Oh, excuse me. Okay, those lows you can see, so they sort of also guide you. At the same time, possible ID 50, 1350 cross, 50 EMA is right on the fair value gap. So let's see how price acts right here. Then from there, we'll decipher whether we take in the sells with this as the first take profit. Then if they break, we continue with the sells, or maybe they want to push back up. If they push back up, which could be the areas of interest. So we've got like a huge M there. That's an area of interest there. So some might call that the neckline or something like that, but kind of shows the same thing. Possible. So if we see them break and come up, we know we're bullish. We'll be expecting price to run up to these highs. also have an OB here. So this whole structure is an order block, but you see it played out for this delivery to the downside. So let's see if we draw it into the future. Okay, we're just going to do this. We had an interaction here with this OB. So if we break here, price could possibly head back up to those highs. Another OB there. Okay. So that's the view on J10. Very, very high chance that we'll see the dealer-induced buyers before we drop. So we just wait for that setup to play out. So if you still have questions, you can just hit me up on WhatsApp. Then you can just share the video, share the link, comments, additions, subtractions. Then we'll take it from there. So I hope this helps. Have a good day.